Welcome on board, Tarak Patel, MD at GMM Pfaudler, joining on the show right now. Tarak, hi, good morning. Good to have you on the show. You know, while your margins have improved on a year-on-year and sequential basis, they're still lower than the 20-odd levels that you posted earlier. Higher gas, commodity prices, clearly I'm guessing are, affecting your margins. But with most commodity prices now cooling off except gas off late, where is it that you foresee your margins headed?
So margins are stable right now. We've seen a cool off in metal prices. However, the impact will really show up from Q3 onwards because we are still currently using plates that were bought at higher prices. There's been a significant reduction in carbon steel, which is the main raw materials that we use for our glass line equipment. So from Q3 onwards, we'll see an improvement in terms of the profitability. Across businesses, obviously our aftermarket, our spare part business is more profitable. That's something that we are trying to grow both in India and internationally. We're also trying to kind of bring in new products and new technologies, which kind of, move us up the value chain. So instead of just selling equipment, we kind of focus on giving them process guarantees and complete, skid mounted units and plants so that we can kind of give them a complete solution then rather than just the equipment. But generally, I think our outlook for the year was to maintain margins. 16 to 17% is something that we would hope to kind of achieve. However, if prices continue to cool, we would probably see some improvement here. What's still a concern is the energy costs in Europe and in India. Gas prices here in India are, quite stable now, but they're much higher than what they used to be. Europe again is facing, energy cost increases in Germany and in UK. So those are the two areas that are a bit of a worry for us. But otherwise, China and the US are kind of not impacted too much with energy costs.
Okay, so you covered energy costs, but there is another factor we have to talk about, and that is the ugly R word, recession. You have the US Fed Chair Jay Powell earlier this week talking about it. In Europe, the recession fears are only growing. What is that going to mean for your business, your capex cycles? Have you already started to slow down, put things off?
No, so I think it's to the contrary, right? What we are seeing is very strong opportunity pipelines. We do see investments coming back to European shores. Pharmaceutical chemical plants are investing again. We have large backlogs, and in spite of that, we are getting new orders which need to be delivered 12, 14, 16 months from now, right? So the opportunity pipeline still remains very strong. There's a lot of activity both in the US and European markets. So we are not really seeing a slowdown right now. I can't really predict what will happen a few quarters down the line, but right now business is doing quite well.
Okay, so you are seeing something contrary from whatever it is that we are reading about. That's good to hear. Now, there is, of course, a push on localization. And as we talk about that push on localization, how is, orders from India doing for you? And I want to go across the spectrum, chemicals and API players. Are you getting more orders from them, even if they're incremental? What about pharmaceutical companies?
Sure. So for our India business, chemicals still remains our key industries that we cater to. Pharma used to be a big chunk, but pharma has been quiet for the last few quarters. We have seen some investment coming into the south part of India, Hyderabad and Vizag. We've seen significant order intake from fermentation plants. So there are large plants that are going to come up in the Vizag area, which are going to make the penicillin, right? So this is the PLI scheme that the government launched. And these orders, in terms of the mixing and the fermentation part of it, has come to us. So that's driving a little bit in terms of the pharma space, but chemicals still remains very active. Investments continue. There's a large opportunity pipeline and major projects planned for the next few quarters.
Right. Tarak, lastly, with fears of recession amplified and macro headwinds in place, do you still adhere to the 4-year guidance that you had earlier given?
So I think we are kind of already going to hit our 4-year guidance probably a little bit earlier than expected. If you just extrapolate the numbers that we have kind of shown this quarter into 4, you will see that we are very close to the number that we had guided for in 2024, right? So we are already way ahead of our plan. We do plan to come back to the markets with a new equity story and some kind of revised guidance. We probably will do that sometime in September. But the focus right now, like I said, remains on extracting synergies, working together as a group, and really leveraging our global brand and multiple manufacturing locations to really give the best solution to our customers.
Sure. Tarak, great to have you on the show. Thank you so much for taking the time out. GMM Pfaudler, by the way, is one of